This live trading room starts now.
Intro rolling.
They can hear you.
Hello, everybody. Good afternoon. My name is Drew Dosick. This is the afternoon session of the live day trading room. I am joined by Lawton Ho. Hey, Lawton, how are you doing today, sir?
What's going on, everybody? I'm doing the best that I can. But welcome to the afternoon session. Something I just want to talk a little bit for those people who are here. Talk about our positions. You see GEB. We're in the money on that. For my stocks, this is a day trade that I got in yesterday. But we're only about 35 cents out of the money, 37 cents out of the money. So definitely considering the SMH is down, the S&P is down, or SMH is flat, and the Qs and the S&P are flat, I definitely anticipate getting out of this position for a win in the next couple of days. But anyways, Jeff says he took put options from GEB from $7 all the way to $35. Wow, incredible. Great job.
How are you guys doing today?
What's up, Dr. B? How's it
Doc.
going?
Hey, got it. You guys seeing Ethereum today is just ripping. It's incredible. If you look at this chart, we talked about this a couple weeks ago. This kind of like bull flag, huge bull flag on Ethereum. And right here was sitting below the 200 weekly, recently broke out, and we're really just very close to the all-time highs. So yeah, incredible run here from like 1,400 all the way up to 4,700. Pretty cool.
It's remarkable, isn't it, Doc?
Uh-huh.
You know, one thing that's cool about that, in my swing trading hodler service, we got into Ethereum just under $1,600, and I legged out of the position on some significant resistance levels moving up, but took the last portion off over $4,000. So made 153%
Amazing.
on that.
Well, I saw you made a 45% gain on your AVAX today, Drew. That was insane.
That's correct. Yeah. Hey, almost forgot about that. You're right.
I know. I was just like, wait, you took a 45% winner today.
That was cool about
that.
No. But he got out of the position today.
Yeah. And it was only half that I got out of.
Yeah.
AVAX we got in, and here, let me pull up that. We got into AVAX at $17.23. And the AVAX chart right now, and here I can pull it up right here. It was above $25, currently still is too. You can see this resistance was holding price down on AVAX over the last several trading days. And then Tuesday poked above, and we're following up today with a nice move higher on AVAX. Now, AVAX was higher over here. We've been staking this position ever since we got into it too. So we're not only taking a 40-something+% gain today on half of the position, but we've also been making money the whole way holding this and staking it. Which is, a great benefit, especially if you're in a different type of investing scenario, much like my hodler service, where I can buy a lot of these coins, and I almost get excited when these coins start falling in price, because then I can start adding. And I'm not going heavy with these, but it pulls down my average and gives me time for these incredible bounces that occur in crypto, and you can capitalize, as we've seen, 40 to 150%. As long as you've got patience and are buying key support levels on a lot of these altcoins. So far so good. Paid out pretty nice on AVAX.
Yeah,
awesome.
and I want to say that in my AMA in my show, Dr. B, somebody was like whoever shouted out BMNR last week, props to them. And that was you, I believe. That was you that gave that trade. And VMNR, I mean, that thing absolutely pushed. Like, let me share my charts right here. BMNR. Yeah, since we talked about it last week, it's up over 70%. So if you guys are watching, this is the guy you have to thank. It's Dr. B here.
Well,
but-
you know, I actually just to show you, I wrote an article about this morning, and what's really interesting is, I think I was pointing it was a couple weeks ago or a couple days ago, I was pointing out this falling wedge, and there was this huge gap fill here. It pierced the gap fill, formed the falling wedge, and then created this this breakout. And you can see the volume breakout here, volume's increasing, and yeah, amazing rally there. It's 120% from the breakout. So sometimes, you know, when you have these now we may have seen it right here. It was probably a Wednesday. It was either a Monday or a Wednesday. I can't remember. But I would have gotten in down here. I missed it myself. So good for you guys.
Yeah, great job. Also, speaking of things, there's a couple comments about this. There's a new IPO that just started trading 30 minutes ago. It's called BLSH. And you take a look here. You can see it's moving like an IPO.
I believe that's what, a crypto exchange, right?
Bullish ordinary change.
I was reading a little bit about it yesterday.
I'm not sure. Not sure what it is. I just know it's an IPO. Do we trade IPOs? Usually not. I think we've traded one time. I think Gareth traded Newsmax one time, and that was insane. That was crazy.
Yeah,
Yeah,
bullish
the
is
rise in Ethereum. What's that?
So I was going to say bullish is a crypto exchange. So I pulled up their website too.
But yeah.
Looks like it says no maker fees, taker fees 0 to 0.03%. Start trading with 0 fees on individual accounts. Interesting. I was waiting for this to happen with the number of different crypto exchanges that are out there. It's like, when were they going to really start competing and in essence kind of have a gas war for their fees that they charge? Much like what's happened with brokerages like Thinkorswim that they don't technically charge for a lot of the transactions that they do. No, Russell, we don't have any music in the background. Yeah, but still interesting to watch bullish move throughout the day. So it got as low as about $80, got as high as 118. I think the IPO was around wasn't it around $65? I want to say 65 or 35. I remember reading.
What was that on what, Newsmax? Sorry.
On bullish.
BLSH is the new IPO.
Yeah, I think they were IPOing it for about 50.
I heard about this.
About 65, 35 or $65.
These are so difficult to trade. I mean, there's just no.
You could just buy it and just wait for it to go higher, or short it and wait for it to go lower. But when you're wrong, and you can make money like that, but when you're wrong, you're gonna die. You're gonna be dead. But you can like scalp it over and over again a little bit.
You gotta wait for the chart data, at least like a couple days, couple weeks. You know.
That's what I'm saying. I'm not interested.
Yeah, with anybody with any sort of technical analysis expertise, you can't trade one day. There's not enough data.
Gambling, you know.
Say what? Say what, Doc?
You're kind of just gambling with that type of thing.
Yep.
I mean, it's what we're always doing, anyways, right?
Yeah. If you can control your risk, then you're not gambling. But you know, if you just look at the charts and DCA in, it'd be fine.
Richard saying going short 1/5000th position on BLSH. There you go.
I know. Here's what I was thinking, right? Let me know what you guys think. Like for us as traders, there's like DCAing and stuff like that. But like, is there a way to do that while gambling? Like literally, like gambling. Like if there's like, okay, you start like, say you're playing blackjack and you start at the minimum table bet. Couldn't you just every time you lose, you double up and double up again and double up again, right? Because you're not. I mean, eventually you'll win one, right? Eventually.
Danny, was it you at the blackjack table that you had like four double downs?
I had like 4 splits and then
Four
a double.
splits.
4 splits and a double, and I had to throw more money into it. It was insane.
And you ended up winning that, right?
I won that, and because I was getting roasted by the table, and then I won that and made it all back. And then some.
That was a great hand.
I mean, it literally took up about half the table with all the cards.
Yeah.
It was crazy. But anyways, that's just what I was thinking.
Tell you the rally here, AMD at the open was quite significant for that company. Just looking at Palantir, started to drop here at the open. Just looking through some of the charts. Kava, yeah, I was looking at Kava this morning. Would have moved higher at the open there. Didn't really give us a chance, did it?
No. Yeah,
Had earnings, right? Earnings?
Yeah. And you know what really kind of threw us off for getting into it? You notice right there pre-market there, Doc, how price was right around $63. And then about 15, 20 minutes before the open, price popped up in the $65 range.
Mm-hmm.
So it was very difficult to just buy it right out the gate, as we were just a little bit lower pre-market. And when I did my analysis on that, I was like, all right, appears to $60. That's going to be a great support level for Kava. And it just accelerated and bounced into the open, and we just never gave us that opportunity.
Yeah, you know what's interesting? The S&P was up here pre-market and then early morning session, and now we're coming in quite a bit here. This is looking kind of bearish. I think if the S&P breaks these lows right here, we'll probably see more downside. This is just euphoric. I mean, just thinking to myself the other day, they're adding how many trillions of dollars of debt with that new bill?
Remains to be seen.
Multi-trillion dollars of debt.
But if you add enough debt, eventually it's like it's all. What's a little more, right? Right.
A little more into the cracks, man.
We're not gonna pay it back anyways, right? So, you just like what's the
little
more?
It's kind of like saying, well, let me just go buy a couple more cars and take loans out on them, and what's a couple more? And before you know it, you've got 10 cars and you can't pay the debt service on them.
Yep.
That'd be fun though, 10 cars. I know a guy who had 10 cars.
Yeah, but at this current state, it's like I think you have like 1 million cars, and trying to finance all of them with as big as our debt has gotten.
Hey, check out this parallel, this rising parallel in the spiders. Yeah, I think this eventually breaks. Interesting. Go ahead.
I was anticipating a break, or at least more of a pause right next to when it reached a pivot high, right? That parallel was increasing, and basically once it reached that pivot high from July 31st, the high is 64.27, and we really didn't get any sort of pause right there. It just had a nice acceleration and push higher. But now the SPX is really just kind of wedged above a parallel and right at the bottom of another longer term parallel. And here, I'll just flip on my chart just so I show the people what I'm talking about real quick. Oops. There we go. I went through this a little bit yesterday in trading the close. So I've been really highlighting, let me delete this parallel, really highlighting this parallel when trading the close. You know, it's just a really tight parallel. Didn't capture all of the downside here in April, but it illustrated that when it was trying to get back up into this parallel, it kept getting rejected, right? We got pretty close and then ended up consolidating, telling us the price was going to go higher. So it was putting in bullish consolidation, moved up, and then trailed this inclining parallel. So far, this parallel is really helping out, giving us a good understanding where price action is going to get likely to be rejected or at least have a lot of resistance. But then if I flip on this parallel, let me flip back a couple clicks. There we go. This parallel, and I'll delete this one so you can see it a little bit better. This parallel encompasses all of the move, including the dip here in April. And you can see here today, we finally are poking above, but then selling right back into the top end of this parallel channel. So if I flip them all back on, you can see price is really just kind of stuck right here in between these parallels. And we'll see how long this lasts. And if it doesn't look like we can get a confirming move out of this parallel without getting above this candle, which would likely imply too, we're not stuck in this little wedge pattern. But all the while too, very curious to see the alternating red and green candles all the way up. So you could have anticipated a red candle today with this pattern that simply developed over the course of the last week.
Yeah, you know what I'm thinking right now too is a possible bull trap on this large, on that trend line you have there on the spiders, right? So that top of that parallel you have, if we kind of rally up and trap those highs and then start to fall, you know, the S&P's rallied 30, almost 34%. That's just a recipe for a fall.
Yep.
So
one thing that I'm waiting on, I was a little curious about today. We didn't get to 6,500. We got to 6,480. So do we make another push up tomorrow to that 6,500 and then start coming back in, all creating that bull trap like you said? So any move up here, if it does get rejected and heads back down, would be a bull trap. Definitely in a curious position here on the SPX.
It's going to be interesting.
Yeah, Luke's saying, wow, great sell-off on Oracle today. Yeah, down to 3.74%, engulfing all of these days of trading before. Let's see if we get a close beneath this candle low, which is at 242. Already pretty bearish, negating all of this price action, but it would be even more bearish if we get a close underneath this pivot low. Notice that likely would be a near-term support area with this minor inclining parallel channel, roughly right around 239.79. Luke asking about how we feel on Elliott wave extensions. Me personally, I do not use them, nor am I an expert. So, what about you, Lawton?
I do not know what that is. I have heard of them. I just never looked into them.
Yep.
You know.
So
but here's the thing. At the end of the day, there's like a million, billion, trillion different indicators that you can use, different ways to trade, right? But as long as you find something that works for you and you can understand them, then it's fine. You know what I mean? There's not like one right way to trade or one indicator, only one right indicator, right? It just depends on how you use them.
That's a good way to put it, Lawton. I agree.
Yeah, it's true. Very true.
Yeah, what I found too, Luke, is that should I include, let's say, all those indicators like Lawton was mentioning, there are many, and there really are. There's so many, but should I include all of those? I almost guarantee some are going to tell me to buy, and some of those indicators are going to tell me to sell, and then it's going to be, over analysis creating paralysis. So I go with my indicators I like the most. Doesn't mean Elliott Wave isn't successful, or if you found success with it, like you say you have, that's fantastic. It's just something that I don't utilize here. I don't think Gareth utilizes much of that either. I know he knows about it, but he doesn't, I believe, use Elliott Wave.
Yeah, I don't use any of the GAN fans or Elliott Wave. For me, it's just trend lines, VWAP, RSI, at least for technicals, right? And then I also use fundamentals. So
that's true. Yeah, Doc, you do a good job researching the fundamentals of the companies. Yeah, I mainly, I'm like you, Doc. I try to keep it simple. I'll throw my SMAs up there occasionally if I'm looking at swing trades, just to see general patterns when they're switching, when I get golden crosses or death crosses, and gives me good general idea.
I think the SMAs are really important, especially on the weekly charts.
Yep.
Those are, I'll just give you an example of this, and let's see. So if you look at, I'm just looking at the trade desk now, but if you look at ETH, if I were to put up the 200 SMA, you can see that the time to buy is around the 200 SMA. This is 2022. Well, September 2024, we were at the 200 SMA. And anytime you're below the 200 SMA on a really quality asset, you want to be buying as much as you can. Not financial advice, but that's my philosophy. And my philosophy is such because generally you see this. Generally you just see, if you were to look at the S&P, right, every time it gets to the 200 weekly, it generally rallies. So if you look at any stock, Apple, right? Oops, what happened there? Keep ratio. Here you go. We hit the 200 right there and rallied. Let's look at Google. There you go. Hit it a couple times. Back here, here, here. Kissed it here. So that wouldn't have worked.
What threw me off? That little drop down in April. Google didn't hit the 200 weekly. The SPX didn't hit the 200 weekly. I was waiting for that 200 weekly to be tagged, and I was just going to start loading up.
I know.
And I was a little disappointed.
I was able to add a little bit, DCA a little bit, but, not enough.
And Michael, you got a good comment saying, Michael says, I used to use FOMO as the main way to trade. Getting away from that being here is worth everything. My 401k thanks you. Awesome, Michael. Good transition. I think most retail investors invest that way too. They hear something on the news, or if it's rallied up a lot like Ether, they're buying Ether right now. So
yeah, look at this. If you look at the Mag 7, Google close to all-time highs. Apple is kind of recovering from a really big beat down. Tesla also same thing. NVIDIA, obviously, we all know that that's still ripping the new all-time highs. Microsoft, just kind of sitting there. And then what are the other ones? I always forget the last one or two.
Oh, I'm sorry. Yeah, AVGOs was another one that's not technically in that list, but it made the new Batman mega caps, if you will. You do Amazon, Apple, Google, Meta, Microsoft, NVIDIA, AVGO, Netflix, and Tesla.
Yeah, Netflix. Crazy.
Lawrence, I like it. Lawrence saying FOMO is still a great way to trade. You just look for it in other people and then do the opposite. That's exactly right. That's exactly right.
So true. William asking, hey, am I coming back on the morning soon? No, William, I'm really focused on the courses and my own trading. And I also have a medical consulting business where I'm, quite busy. So that's a good thing. So yeah, 2 afternoons a week. And then, but I'm trading every morning myself from my home command station here.
Nice. I know we miss you here, Doc.
Yeah, I miss you guys as well. So let's see. FOMO, Meta. Oh, Meta, of course, Meta. Yeah, I'll tell you what, guys. These are levels that are just so crucial here. Look at Meta, look at Microsoft. Like they're right at the highs here. NVIDIA, is there a line here? Let's see. Look at that on NVIDIA. Oh, this.
Yep.
The next bear market is going to be so nasty. So nasty.
Yeah, it makes me, I always ponder too, what's going to be the thing, and it's very hard to predict a black swan event, right? Or even contemplate one. But we do have some things kind of resurfacing again. Obviously, we got potential good news this weekend with the meeting with Putin and Trump. Maybe they can get some sort of dialogue to start getting a peace plan done in Ukraine. European Union rolled out what they've done. They've locked Russian assets, and they can't distribute those assets, or at least they're not doing that. But they've accumulated a lot of interest on those assets, and in the tone of over $1 billion that they just are sending to Ukraine. So there's a lot of activity still going on over there, and if we were to have some sort of light at the end of the tunnel for a conclusion, that certainly would be positive news. However, you still do have U.S. battleships right by Iran, and it sounds like they're not really, I guess, following through with some of the nuclear negotiations with Israel. So that could flare up too. So say if we have, the talks this weekend fall through the cracks, maybe that Israel-Iran situation flares up, and then we have tariffs that really haven't been rolled out to a lot of products that we buy. Now, we are having prices increase slightly, especially if you go to the grocery store. But I don't think here in the United States we've really felt the true effect of the tariffs that have been rolled out. Yeah, Michael saying bear market is over 5 years past due. Yeah, I agree with you. All right, so for this week, we had our inflation data that already came out, basically in line with expectations. And we have also got PPI month over month coming out tomorrow morning at 8:30. That could move markets. We also do have Michigan consumer sentiment coming 10 o'clock on Friday morning. Retail sales month over month hit at 8:30 in the morning. Retail sales I haven't found to be as big of a market mover, but it certainly could create a small amount of volatility. I've seen Michigan consumer sentiment, though, at 10 o'clock. That has actually created volatility on Fridays. And oftentimes we're in day trades at that time. So this could be very beneficial for us. If we're not in a day trade, we could obviously start getting into one or two on that volatility come Friday.
And sorry, Cody, I was trying to say something, but my mic was muted. But you're saying that we miss your sixth sense finding wedges. And yeah, so after you've done it enough, you just kind of see what works. There was a wedge I was trading this morning on, I think it was, let me see, MNTS. Yeah, so this is a much smaller company here. But I realized I couldn't short this. There were no shares to short. But you could see just kind of an example of a wedge that really, really worked out well. So I kind of saw this. There was bearish divergence. Stock was up significantly. So this is a kind of a small cap, a small cap. Look at that wedge pattern. And then look at how people just bailed. They bailed right here. Pretty significant gain here from the highs. Again, just no shares to short, very, very crowded short. So
Interesting. Lawrence saying it looks like the Fed is almost prepping us for a bad PPI tomorrow. Goolsby's speech an hour ago referenced stagflation repeatedly. Wow. And we're at the highs. I mean, we presented that too. Doc and I did when we got right here on the mic. First thing, we're looking at the SPX. We're looking at these mega caps, all of which are really high on the charts and right into levels of resistance. It kind of makes sense that we're overdue really for a pullback, especially considering the march up we've had since the beginning of April.
definitely overdue.
And it doesn't need to be a 20-30% drop, but we're just due for about a 5 to 10% technical correction in the markets.
Yep. McCoble and at Pinterest at 38.50. Let's check this out. So McCoble, so everybody do us a favor and just say, hey, I'm long Pinterest, 1/10 position or 2/5 position at a certain price. Because, if you're saying you're in Pinterest at 38.50, I don't know if you're in a full position, if you're in, 1/10, if you're short, if you're long. I imagine you're long.
Yeah, it looks like you just popped through and said, yep, long.
Okay. So, yeah, I think, you're just rallied here about 70%, then fell about 20%. And so you do have a lot of support here with these trend lines, the 200 weekly. Sorry, this is the 200 daily on the daily chart. I think you'll probably have resistance here. And then obviously a gap fill. Those are the two big areas. And don't forget, there's still a trend line right here. So probably somewhere in here, you'll have a pullback.
Lawrence, you're right. Lawrence saying, but if the markets come down, you lose the wealth effect. That's true. But if we only have a 5-10% correction, you won't really lose too much of that wealth effect. Like what we saw in April, if we have something similar to that and then the price stays down there, then I think you're really going to lose a lot of the wealth effect. We get a run-of-the-mill 5-10%. I don't think that's really going to hurt the wealth effect that much. But then you combine it with the fact, like you mentioned, with it's then saying nobody is paying for tariffs or luxury items, and that revenue stream that's supposedly to help pay the U.S. debt is gone. That could be right if we do get a sharp sell-off. We already have seen how many companies now, Doc, on this earnings season saying that their guidance is either completely stripped or they're reducing guidance. How many companies have also said they're absorbing tariffs as long as they can, maybe through the end of this year, and then they're going to just let the tariffs be?
Yeah, it's definitely interesting. The reverse wealth effect is an interesting thought. The problem is we're in a predicament because Trump wants the stock market to rally. We're in too much debt. The higher the stock market goes, the higher the wealth effect gets. Inflation still hasn't come down to 2%. We're kind of right below 3%. So the pricier your assets get, the higher inflation stays, at least partially. So I'm not an economist, but it just doesn't seem, it seems disjointed. It seems like there's going to be a reckoning at some point. The other thing is that generally when the Fed cuts rates, the market will rally for about 3 to 6 months. And then after that, the market drops. So you might get kind of one lap, like a blow off top, and then a fall. So, but really, we're due for a bear market, like someone else was saying.
Yep. So far, this is now the 89th trading day from the pivot low on April 7th. Let's go to the weekly chart. Let's just do some time analysis. So this weekly chart, let's see this from this complete, see the complete run up to this pivot. So we got 122 weeks there before we saw a decent pullback from a good extension. We're at 41. So we had 41 weeks, and then we had a nice pullback here, about 10%. And that's a general market correction. So in this scenario, we're only up 18 weeks, but yet the amount we're up is just so much. So let's see, 33%. So we had a run of about 31% before we saw a good 10% correction. So we're right within that range. Even when this was, puttering right here, we did have that short bear market at the end of 21 into 22. But you can see the rally that occurred here, 31%, and then we had a 10% correction. Now from this huge steep fall, we've rallied up 33%, have yet to have a meaningful pullback, a meaningful correction. So we're overdue with that sort of move.
Yeah, I sent something to my wife this morning about the kind of the markets. And so if you look at some data here. Okay. So the PE ratio, right? So the PE ratio on the S&P is currently around 20, let's see what it is, 27 to 30. Historically, so you guys are gonna like this. Historically, the average PE, and I've talked about this before, is about 16, 17. So we're almost double the average PE. And just remember, in bear markets, it goes below 16 or 17. It goes to like 10 or 11. Before the Great Depression, the PE of the S&P was 32 to 33. We're currently at about 30. Now, the post-Great Recession rebound, which it was 70 plus, but you had QE during that time, so that you kind of have to scrap that. The COVID bounce right over here was a PE of about 35. And then the dot-com peak was a PE of 44. So 14 points higher than we're currently at now. So that was something. We could get to a situation of another dot-com-esque boom where you have like AI, driving it. I wouldn't be surprised. And I think that's where we're probably headed. Maybe to 7,000, 8,000 on the S&P at some point. Though, we have a bad bear market.
Yeah, I can't help but think that sometime we'll have a 10 to 15 year stint where we're just not making new highs.
Oh, there's going to be a lost decade for sure. So, the U.S. I was just going to say, what was the U.S. debt in 2000 before the dot-com crash? That what's scary is the total federal debt was $5 trillion in early 2000, just before the crash. So now our debt is 6 times more, but the PE isn't as high, so it's not as bloated. So, yeah.
Hey, Jack. Jack's asking about any short levels on SE. What are you looking to do there, Jack? Looking for day trade, swing trade? You looking for the next levels up on SE? Luke saying Elliott wave extension showing 6,800 before a blow off top. Interesting. Day trade short? No, I wouldn't be interested in doing a day trade short on SE. SE is actually down right now. So I wouldn't be interested in shorting it. Actually, you know what? It just popped up. I just flipped over a little bit ago. It was right there on the flat line. But you see here, it's up 0.13%. Yeah, Ben and I went over this in the morning. There wasn't, his level was up here around 200. We do have this resistance, but since resistance was so close to being tagged yesterday, I'm not going to jump in front of it today. I'm going to need another follow-up move with an extension. We could have started inching in earlier, but my level is basically going to be up here around $200. Now, SE, as far as a swing trade, you technically could, but you got to keep in mind something with SE. Look back here on the monthly chart. You can see this was valued over 350 at one time. Now they're starting to get their mojo back. I'm not saying they're going to go back up to 350, but this is a little on the lower end of the chart. Now we have had, look at this recovery, massive extension on the RSI monthly. Now we're poking above it. So I could see how you would be inclined to potentially play some sort of drop off of this inclining trend line right here. But again, we got really close and basically tagged it right here on June 5th and basically put in bullish consolidation, and then now we're reattacking it. So I wouldn't be wanting to step up there. I think around $200 would be an area I'd be more interested in, even with the swing. Now you can always inch in, DCA. If you like the short here, you can start inching in here, but then also keep in the back of your mind, price could go up here. So keep some money available to add to the position if that happens. George asking about Archer. Didn't you go over Archer the other day, Doc?
Yeah, I'm just looking at that chart over here. So if you look at Archer, this stock, remember I was talking about this level over here? You have all this from before. Look at that fall. And then you came up, kind of chopped around it, hit this line a couple times. And, you know, in terms of, I think it's probably on the downside. This just seems all bearish. Clean this up. Kind of a big rising parallel. So I think this eventually comes down here. And so, yeah, I don't see, you're kind of in no man's land, right? You're kind of right in the middle of the chart. You're not extended to the downside or the upside. So I don't have anything on it right now.
Kind of right in the middle of the chart. David asking about UNH. Let's see, UNH. UNH got a great bounce from this 238 support level. I know you did some good analysis on that too, Doc. I'll flip to my screen briefly, and then if you want, you can add to that. Let's see, as far as UNH, this 238.22, that's been the spot. I really thought it was going to be difficult for UNH to break this inclining trend line that you see, and I'll flip it to the weekly so you can see that. I really thought that was going to be difficult to take place once it recaptured above. So basically with UNH, if you're a bull, you're going to be looking for a target basically around $300, which is this inclining trend line. Notice we've got this declining trend line also. I extend that out to kind of highlight it. So whichever comes first, hitting this inclining or the declining, that'll be resistance, especially if it takes a while to get over there. And then head up and hit that area. That would be good resistance, which in essence is just under $300, $299 to $300.
Yeah, UNH. I've been keeping an eye on that. I'm in that, and I'm disappointed I didn't add. So I'm just maybe, I don't know, a couple percent out of the money. But I was at one point about 16%, and I didn't add. I thought it was going to come down to this level, but you know, I was giving myself some room.
Yep.
But this company is starting to rally. The stock's starting to rally. They have great fundamentals. This is significant support here. You know, we're basically, we pierced the 618 fib. I think this probably rallies up here to 330. So,
yeah, I agree with you. I think UNH does have a long way to run.
You know what I bought today? Sorry to cut you off. I bought MOH. Nice support level here. Didn't quite get to this trend line. That's kind of a minor trend line. And starting to bounce here. And, you know, if you look at the daily, there's not really the best wedge. This really is not a wedge. I'll just remove that. This would have been awesome, this area right in here, but just didn't get there. So check this out. I'll show you a chart that I really nailed the other day. This is a beautiful, beautiful wedge right here. So this falling wedge, you can kind of see it better on the daily. I was able to get shares right in here. I ended up selling way too soon. I think I took this for about 20%. I sold right in here, but man, had I held on, I'd be up 50%. Just an amazing gain there. So, you guys see Hood here? Hood got crushed here at the open.
Yeah, it's about time too.
You can see this really large bear flag coming off the highs, and then whoop, rolled over.
Wow, that's interesting. And you got the 2-minute there?
Yeah, I use that, for my stop losses. So.
Wow, that is awesome. That is a beautiful chart.
Okay, well, let me go to the 5. See that right there? That bear flag.
Yep.
A lot of money is made here. People shorting this from the highs here. It's a lot of money made and lost.
Yep.
Bear flagging again. I think it probably does this again. It just needs some more time to consolidate.
Yeah, I've got a near term here. Let me see how long this trend line. Actually, no, that's a long-term trend line. Right around 103, 103.50. Coming up on the hourly from basically the April lows. I'll be first area of contention, maybe support. But then if it breaks that, I think it's coming down to 81.44.
Yeah, I have about the same level.
Robert, this question actually came through a little bit ago. It says, when the market rollover is imminent, would you use SQQQ, SPXU to short the markets? Well, I mean, first off, just because our charts are showing us we're overbought, we're into an extension, we're in an extended move, we should have a pullback. I just want to preface that by saying that markets can stay higher longer than anticipated, and then also markets can stay lower longer than anticipated. It's important to understand that element. So when you use the word imminent, it may be right, but every time I get into a trade, I always go into it thinking, if I'm wrong, where's price going? If I'm wrong, what's my backup plan? I used to think, oh man, this is a great setup on the charts. It looks like we're bull flagging. Heck, I had one of those calls almost yesterday, on trading the close on Kava. Now I prefaced this too by saying, I said, guys, earnings calls are coin flips. But I said, from what I see though on this chart, we have a longer term trend line price has been trying to break out of and get through. Well, we finally confirmed the breakout right here on this candle, and since then retraced the scene of the crime down here on the trend line. I said, of any chart that I'm looking at for earnings to go up, this is looking more so like one that's going to go up. And then look, boom, slammed down. So it's one of those scenarios where, yes, I would play those ETFs, SPXU, SQQQ, SOX, like what Lawton's got. But then again, you see that the markets can just extend longer than we anticipate. So whenever you play any sort of ETF, especially leveraged ETFs, the timing of those is so much more sensitive, since they do have 2 or 3x, whatever leverage you choose. It can take you out of the money pretty quickly. So always, even though we're extended, I totally think the market should come in. I've been thinking that way for the past couple of weeks now, though, and they really haven't come back in. So I just want to forewarn you there, but I agree with you. It seems imminent. We're in the middle of August, so that imminent may turn out to be a month to a month and a half from now. It all just really depends on what we get dealt as far as any economic news in the most near term. Constantine, no, I don't have any. Constantine's asking, hey guys, quick question. Any ad levels on GEV? I have not. Gareth didn't convey any of that to me. Here, let me check. Yeah, no updates in that regard, Constantine. One thing I do want to relay, though, just like what Ben was saying to me just a moment ago, and it makes sense. The ad levels, he'll convey all of those to us. But most importantly, anytime you're wanting to add to a position, you're in essence putting more capital, right, into that position. So you're exposing yourself to more risk. And so if you can't move that average price, it's really not worth it. For example, right now price is 628.64. And what we're going to move the average price by 30 cents, 20 cents. If I were him, it would be something substantial, something much higher, which could put us out of the money more at the time frame of the enter, but it would allow for the average to move. So right now he's looking for what price to move below $600. I'm not sure, he hasn't conveyed his ad level, but just kind of the way I trade, it would be equally as mount. So if we're talking about $28 move down, we're probably talking about, for me, that would be around a $28 move higher before we start talking about adding. But again, Gareth has not specified a level to me, but we will give that to you as soon as I get it. Definitely want to keep you in the loop. Yeah, Jack's saying, I think he said it might bounce back to 635. Yeah, I think you're right. But I don't think he mentioned adding at that level. Now, obviously, you guys can do whatever you want with your positions, but Gareth is not going to be adding that close.
Varadraj asking about UAL. So I'll chat about UAL here. Incredible.
And you're welcome, Constantine. Oh, I just lost Doc for a second. Here, let's see.
Here I am.
There you are.
Sorry, just a glitch there. I'll flip back over to me. So let me take it off of you. So yeah, UAL is coming up here above the previous high, and I think it looks strong. Just understand that if you were to go to the daily chart, you'd see, this parallel. Well, it's really a wedge. It really is a wedge, actually. So there's a wedge. And I think this eventually falls, but we'll keep an eye on it. Again, if the S&P continues to stay strong, this will probably break out higher. So if the S&P falls, I think it breaks down from this wedge.
It's interesting. UAL was pushing higher yesterday. From what I read, it was just because they increased their fares. So their passenger traffic had been reduced, but yet they increased their fares, and then the stock rips. So it's kind of a head scratcher there yesterday. And Charles, congratulations to you. Did you go over Bloom Energy, Doc, yet, or no, with Charles?
No, I didn't see that.
Here, let me pull it up, and I'll take care of it. Let's see, Charles, great job though. Charles saying this morning I had been looking at a short on BE, which is Bloom Energy, what you see on my screen, around $45 off of a weekly double top going back a while. It did work. However, I'm wondering if that would have been a too aggressive entry. Ads would have been about every buck. No, that was awesome. This wasn't on my radar as it was a slightly, it's a smaller market cap. Doesn't mean we can't day trade it. This has recently crossed the threshold of 10 billion. Look at the volume, great volume, 10.88 million, 14.03 million for today, but 10.88 for average. So it's a great stock to, as long as it's got volatility and moving, you can get in and out of it for a day trade. So no worries there. It was awesome move. So from this move high 41 to where'd you get in at 45? That would have put it about 10, almost 10%, 9% up. Great entry. You know, it just wasn't even on my radar. I likely would have been joining you with this. And let's see here too, calculating. And I mentioned this the other day, and we'll go through it a little bit more in depth tomorrow, as far as my step-by-step process and how to anticipate where my ad levels are, what I'm thinking. You know, I described in several sessions ago how when I was a member, when Gareth would announce certain stocks, after being a member for a while, I started to be able to locate the levels of his ads before he announced them. And you can do the same thing with me too. It's not like I'm just coming up with these randomly out of my head. They're mathematical calculations, and I'll go through those with you so that oftentimes when we're in a trade, you probably won't even need me to tell you how much further away I'm going to be adding, as it's all calculated out. It's all with the mathematics, and then also it's it's simple mathematics. It's nothing hard. You know, we can do these calculations on a real quick, your phone or even in your head. It's pretty simple. But anyway, we can see here with the price moving up to 45, you're up $3.87 on the day. Adding about a buck higher would have actually been a little bit too far. Maybe 50 cents would probably been about the right area to add. A target would be around 50 cents to a buck on a move like this too. And that would have been a nice score. So, but ultimately you did the right thing. You saw I've got some technical analysis on this chart too. I was very interested when BE broke out and gapped up over when there was his earnings back in at the end of July. When we had this beautiful break and gap and move higher, I thought this gap up would at least have price come back down into this declining trend line, and I was going to buy it for a swing trade. So this is one that got by, and man, there's a lot of stocks like this that happens where I'm not just going to be FOMOing and paying up for it here. This is a case scenario where that would have worked, but I'm going to be disciplined, buy the support, sell the resistance. As you see here, price did pause. It looks like for almost about a week, right here in this resistance range at 37.01 before accelerating higher, almost putting in a daily topping tail. So awesome trade. Not only was that a big accelerated movement in the double top, look at the RSI on the daily. You had a ton of great factors there. So awesome trade for you, Charles. Way to go. And way to do that on your own too. That's fantastic. Very happy for you.
Let me take a look at eBay for TED. Holy cow. Unbelievable, this stock.
I'm going to flip it to your chart. Oop, you got it.
Yep. Unbelievable. This stock just won't quit. And you can see, we blew through this trend line here, this trend line here. There's another one here that we've blown through. See what the fundamentals look like on this thing. A dividend paying stock. Wow, I didn't know that. Yeah, very rich. PE is only 20, 21. That's surprising. It must be churning out the money. Our margins must be high. I don't have anything. I don't have any resistance levels for this. I really don't.
Yeah, me neither.
I think, when you don't have any levels, that's a perfect time to wait for like a wedge or a channel, and just wait for the breakdown of the channel, right? Because you don't know where to short up here. So if you have a channel like this, right? And let's say that you didn't have a line here, just short here. You can always add up here. You're never going to get it perfectly at the top, or wait for a trend to develop when you don't have any levels.
That's right. When price gets into discovery mode like this, I tend to look at the psychological numbers. We're right there by $100, right? We've had a straight move into that $100. It's going to be very difficult in my mind to see not a lot of profit takers hitting the sell button right there. Now, will that be enough to have a swing trade? That's a bigger question. Could this be a bull trap right on top of that trend line? Very well could be, with the sharp ascent that we were seeing here on that eBay chart, right? So another element that I've used, and this is a little bit harder when you're doing all-time highs. You can do max move extensions from the moving averages. And if you studied those at all, that's something I should put that through in a course, but it's really good, where you basically see price point throughout the chart, compare it with the moving averages, and then get a general range of how far away price runs from that 20 moving average. But then there's rules to it where you have to generally be in the same level of the chart, as far as if you're calculating dollar amounts or percent amounts from that 20 moving average. And that generally gives you an idea, because that 20 moving average, I like to think of it like a retractable dog leash. You know, you've got that dog leash, it's got the handle and that spool inside of it, and the dog can run, say, 15, 20 feet, something like that. And then the end runs out, and then the dog's neck pops back, and then you can kind of use the button and zip it back in. I think of the 20 moving average is much like a retractable dog leash on the daily time frame. Now, just because we're very extended doesn't mean the stock is going to just drop and fall back. We could see consolidation, and then that 20 moving average catch up to it. So that's the risk you use with that sort of trade. But like Doc said, it would be better to probably find a pattern. It would be better to find a break like that. That would be a more confirmed, because otherwise you're trading without a great level in hand, and you're just basing it off of an overextended move, which basically is a single factor trade, right? What Doc's presenting is a multiple step, multiple factor trade, which increases probabilities for the outcome to be successful.
Yeah, I would probably stay away from that until something develops, like we're chatting about. Joseph has a question there for you, Drew.
Oh man, Joseph, thank you. So kind of you, sir. Joseph said he's been a member for over 2 years, and in Palantir and NVIDIA. Yep, I've made the margin. Yep, so far about I've been right there with you, and NVIDIA was one that I ended up cutting, and also with Palantir too. So with that being said, let's look and try to analyze where these areas likely can pull back, and also when they're likely to pull back. So good thing, first up, NVIDIA, we've got a beautiful inclining parallel here. You see, obviously, price broke out through the bottom, much like what my SPX chart looks like. I've got a narrow or more narrow parallel. And I think, Doc, you had one on NVIDIA that was a more vertical parallel. Is that correct?
Yeah, for sure.
Okay. Okay. Well, on this one, I at least show, and here, let me just, for curiosity's sake, what happens if I pull it down here? And man, that lines up pretty good. Look at that interaction there with the 50. Okay, so notice how the RSI up here, and Ben's more of a specialist on RSI than I am, but it's remained up here. It's not gotten a good pullback. So this isn't giving me the divergence that I'm looking for, but it's still remaining overbought, right? So that means it's not giving me a signal like, hey, we're going to fall tomorrow, but what will give me that signal more so is this inclining parallel channel. Now we could come through in a scenario of, busting above and then falling back down. But ultimately, I'd be watching very closely this inclining trend line right here. Notice it's only been touched twice. So that means the next time it gets hit, it's likely going to bounce. So maybe we get a poke through, or maybe we start selling sooner rather than later, hit this trend line, bounce up, retest that parallel, but then I'd be looking for price to come down to this 50% area of the parallel channel, currently right around $150, $145. I know it's tough. What I found sometimes in tough positions, it consumes not only a lot of buying power, but a lot of my mental capacity too. And then that prevents me, both scenarios, from getting opportunities for other trades. But when it's a big enough trade going against you, you can't just arbitrarily cut, nor can you cut when it's near the highs, right? Then it's just, might as well throw in the towel, right? You know, on the downside, depending upon your longevity with this inclining trend line, this is the weekly chart of NVIDIA, pivot low here from April of 2024, pivot low here of April of 2025. You know, on the longer term, I would be looking around that to see if price could, and if it comes down into it. Also, the weekly 200. Notice NVIDIA just likes to forget about that. It likes to leave it in the dust and just move on its merry way away from it. But I would be, if I could hold and it wouldn't affect anything, then I would be looking for a retest of that trend line and or this 200 moving average on the weekly, because they will be hit. It's just a matter of when. Palantir, let's see Palantir real quick. And what I've started doing too, because they can be pretty large. They utilize a lot of buying power, right? Whenever you're shorting some of these high flyers. So what I've tended to do recently too is I'll just go a little lighter. I'll just go a little lighter on shorting bigger cap stocks. That way, it's just, if it goes against me, it's not going to really paralyze some of my trading capabilities. Let's see here. All right, so for the SMAs, we've got space out on the daily. We've got proper spacing too on the weekly. Nothing's really saying this can't go higher. I know, as bizarre as it may be, we are into resistance with this inclining trend line. I mean, we're poking up above right here. Rapid ascent like that should at least have a pullback. A minimum pullback I'm seeing is this inclining trend line right here, probably around 167. That would be minimum. But then I would watch the stair steps on the way down. Watch this inclining trend line next. That's created from the pivot low of May 6th. Then we've got this longer term trend line from pivot back in 2021 all the way to the pivot in February of 25. And I think that's likely where price will probably get a sustaining bounce followed by this. This trend line and this trend line are the longer ones, which are going to be more, they should be stronger. They should be more dominant to catch price and provide that bounce. These ones would be the more minor, the shorter terms that you see, almost making a parallel, somewhat of a wedge. So that's what I would be watching there. I'm unsure. You know, I guess we get in a bear market, anything's possible, right? You flip over Meta. I mean, Meta now 781, and I reference this a lot here in the room, or maybe even here in my office too, just because I just remember this like it was yesterday. I was buying Meta like hand over fist when it was under $100, and now this thing's up at 781. Like, whoever thought Meta would have gone from 386, declined 76%. So that's the capability of what can happen in Meta. So let's see where that would take price. 75%. 75% reduction takes Meta under $200. So again, that still makes my hand over fist buying frenzy that I was doing back here, still makes it incredible. You would be making 100% on your cash.
Yeah, Drew, I think the one thought of Meta though is, man, like if you look at, I agree with you. With the next bear market, I do think we're going to see something pretty bad. But if you look at Meta, curious as your thoughts on this. Meta was trading up here around 381 and fell below the COVID low, below the December 18 low, I mean, we were trading at levels from 2015, and stocks hit their 2015 levels all the time. So the question is, do we have that big of a fall when, during the next bear market? That would be a pretty bad downtrend. I don't know. What do you think? Maybe it just comes here instead and then rallies?
It very well could with that pivot. Yep. I think on the next, what's curious about this, the whole thing too, and I think one of the members talked about it when we were discussing Bitcoin this morning. It's like right now, if you were to say at Bitcoin's current price, I'm not looking at it, just 120,000. But if I were to give you an opportunity to buy it for 10 grand, you'd be like, dude, no brainer. Of course, I want it. Like, give it to me.
Yeah.
But
Yeah.
when we get in the scenario where we've seen Bitcoin slammed, or something like what happened to Meta getting slammed from 380 down to under $100, a lot of people are scared to go near it because they're like, it's already been clobbered. I don't want to buy it. And that's where the discipline of technical analysis really helps us, because we just try to act like robots. Here's a support level, I'm buying. It's simple as that. I'm not scared. I'm buying Meta, I keep buying, just keep buying it, and it turned out to be a fantastic bounce. But that's one of the greatest things I think about technical analysis. We can try to get rid of those emotions that keep people away, and then also we don't have the FOMO, so that keeps us out of that scenario of getting the rug pull situation. So anything we can do technically, I think it keeps us out of a ton of trouble.
Amazing.
Another thing I was going to say, because I wasn't listening to you. Another thing with technical analysis is, we utilize support and resistance levels, and just like you were demonstrating the Meta chart, sometimes the support levels just flush through. Right, so all we can do is set up our accounts and our ourselves for success, and so that's why dollar cost averaging is an advantage in a lot of situations. And now we would have never known, obviously, you would have never known it was going to go up 700% or whatever it is from that $100 level. I think it was even down to 92. But
Yep.
The sentiment in the market changed, and I guess they got rid of their AI cars or their self-driving cars and got rid of the metaverse, and now all of a sudden, I don't even know if they got rid of the metaverse, but now huge recovery.
Yeah, that was the
Continuing to
craze of the
push.
NFTs and the invisible real estate property that people were buying.
Oh my gosh, I think they were doubling down on the metaverse, and we're going to run out of space here, so you might as well buy some land in the metaverse. I think LeBron James actually ended up purchasing some property in the metaverse as well. I don't even know what happened to that.
It's funny how that discussion just totally went silent, isn't it?
Right. It really is.
I think they were getting ready for like Ready Player One. Have you guys seen that movie?
No, I hadn't seen
No.
it.
Oh, you guys should watch the movie Ready Player One. I think that's what kind of the idea that they were going with is like, hey, we create our own little world inside of this, and you put on these octagoggles or whatever, and you go interact with people inside of your own world. You create theme parks and whatever else. It's an alternate universe. I don't know. Alternate reality, I guess.
That's
Yeah, I
pretty cool.
agree.
Yeah. I like to touch and feel things, real estate, real land, right? I think this electronic stuff is just very risky.
I saw it twice too, Russell. Yeah, Russell saying it was nice.
Oh, cool.
It
I'm
was
gonna
a
have
great,
to check that out.
Yeah, Russell saying awesome movie. Lawrence is saying great movie. Yeah, Ready Player One. It's a good movie. It really is.
That is cool. Well, guys, I'm gonna hop off, get ready for trading the close. Ben and Doc will take you through the end of the day, and we'll be back in tomorrow morning, get some more day trades. But besides that, thanks for the conversation, Doc. Enjoy it as always, and you guys have a great rest of the day.
Take care.
Thank you.
Yeah, Mujasem asking about AMAT. Let's check out AMAT here. Let's see. So AMAT. So let's see what the question was. They'll announce earnings tomorrow. What is your view since the stock is 50% from the all-time highs? AMAT kind of has a little bit of a inverse head and shoulders here. You can see this right here. And I think that this could totally break to the upside, you know, especially with the markets still in a raging bull market. So you can see previous inverse head and shoulders, how that reacted on this company. And big rally, breakout, retrace.
Dr. B just likes drawing smiley faces on his charts. It's fine.
Yeah, I know. And curly hair, right?
Yeah, there you go. That's how you tell the measured move. So it's conflicting, right? So I see exactly what Dr. B's saying, and that's awesome. I see it as well. And then you switch up my AMAT chart, and then all of a sudden, okay, so yes, you absolutely have this inverse head and shoulders pattern, shoulder, head, shoulder, right? So what you're looking for is a break above 200. So if that happens, then AMAT has definitely the potential to go higher. Also, what I'm noticing though is you've got this break of this upswing trend line. This triggers a move to the downside. And so even though we do have that inverse head and shoulders, and this is part of the inverse head and shoulders, you have to break this upswing trend line in order for you to put in the shoulder. It could come up and retest $195, $200. And then this is still resistance, this trend line. So you're going to need a substantial break above this. If not, you're coming down to 165 bucks. So just kind of part of the struggle with the earnings is, yes, you got an inverse head and shoulders. It unfortunately hasn't broken out prior to the earnings release. And so it absolutely could skyrocket, but it could also sell off. Like ON.
Yeah, no, I agree with that. I mean,
Yeah.
that's what makes the market. You know, everybody sees it differently. I agree. It's still overbought here, and you know, it all depends on the earnings.
Well, even not only that, but the guidance, because ON had good or bad earnings, and it popped. I just wrote an article about it. Look at this. Bad earnings, bearish sentiment. So in theory, it should have fallen even further, but had a big pop. But then all the sellers came back out, and now it's down 8% from this opening price right here on ON.
Yeah, guidance for sure. You can blow out revenue and earnings, and your guidance can be bad. And because the market's forward looking, they're looking down the road, right? Guidance of the next quarter, and that's why they sell off.
Yep. Here's another chart on earnings. Bear flag setup, resistance level. So in theory, Duolingo should have broke down. Now it's actually below where it closed before earnings. Ended up getting up to 468 bucks, but look at this sell-off. Got all the way down to this low pivot today. It's 316 bucks. It's crazy. Earnings is a crapshoot. It's a lotto ticket, and yeah, it's tough. So I guess that to say it could go either way on AMAT. Lawrence is saying I watched American Made last night too. Forgot how good that film was. Totally off topic. Yeah, that's all right. Steve is saying, but they already have that stuff with MMORPG without spending all the money for the metaverse. What is MMORPG? I know what RPG is, like a role-playing game.
Ben, I'll be right back.
Yeah, no worries. All right, Brian's asking, what are your thoughts on SoFi? I was thinking it's shorting at 25 if the market pushes up a little bit more. Yeah, let's take a look at SoFi. At 25, well, let me double check. Does it have earnings coming out soon? Give me 1 second. Not sure why it's not pulling up. No, I had earnings in July. So with the SoFi chart, you've got this beautiful topping tail. You have this nice bear flag forming, so nice down move, slow upward consolidation. So I would be okay with 25. 25 looks like a great shorting opportunity based on the fact that you have this topping tail, right? Well, you have a weekly topping tail as well. So if you get up again to $25, great shortable level. What would negate this topping tail is any close above this high pivot, 25.10 on a daily closing basis, 25.11 on a daily closing basis. That would negate the topping tail. It would negate the reversal pattern. It would make this so that way it's no longer a bear flag, and this would be more considered bullish consolidation at that point. So now if you look into dollar cost average into this, you have this high pivot right here at 28.30. That was the previous all-time high. So yeah, this is why I got rejected right here. You got these pivot tops. Massively multiplayer. Tessa just sent me. It's called Massively Multiplayer Online RPG, World of Warcraft. And okay, thank you. Thanks for sending that over. I appreciate it. I've heard of stuff like World of Warcraft and stuff like that. My friend and my brother used to play it a lot. Oh wow, actually I just read a lot of you guys know what that is. I never got into it. That wasn't never my thing. Not that there's anything wrong with it. I just haven't gotten into it. But yeah, back to SoFi. SoFi, a $25 level is a great opportunity for a short. That's what I see. And then we're looking here, see if there's any other trend lines. So you're looking to break. Let's see if we can find other trend lines that indicate there's possible reversal. Let's draw this trend line here. Okay, so it's already broken back through there. Instead of MMOs, Ben played and still plays the chart game. As long as I'm not on Lawton's team, he gets so mad at me when I lose. Oh my gosh.
What did this guy say about me? What happened?
I said, as long as
I'm
I'm
over here trying to write an article, be productive. And over here, I just hear out of the corner of my ear, as long as I'm not on Lawton's team.
Yeah, playing the chart game.
Oh.
Am I wrong? Am I wrong?
I get so aggressive.
No, you get mad when I lose.
I just don't like losing.
Yeah, I get that. All right, so you've got this hidden trend line. So you've got this low pivot, price consolidation right here. Once price action got underneath it, price was rejected several times. So it looks like it got rejected again. It could push up a little bit higher. So, you know, you could start here and slowly dollar cost average up into double top. If that's what you're interested in. But yeah, so if I could move up. Stock market is the best video game I've played yet, says Corey. Richard, Exhibit A. That's right. All right. Matasium saying RDDT. Do I see RDDT, so Reddit at 235 and continuing? Well, it's 235 now, so, and it's above that. So yes, I feel like it's going to continue at least up to $35.61. So the chart of Reddit, it could go to 140. Reddit's just been a powerhouse. You see these moves every once in a while where you get this price that just continually floats higher and higher and higher without any big pullbacks. That's kind of similar to what happened here. You had this price consolidation, nice pull up, and then look at that, 65% drop. Now, is that going to happen this time? I'm not sure. It is looking overbought, big time. So all I can do is draw trend lines. As long as it stays above this upsloping trend line, then it's still bullish and it could continue higher. Yeah, so 250, it could absolutely get there. One thing that I like to take note of is the RSI is staying relatively high. No negative RSI divergence. However, you don't see stocks pushing up that hard into and above the 80 without a pretty sizable correction. The only thing with that, though, is if you notice, there's not much price movement, which means that there's not much RSI movement. So you can't really use that as an indication of, yeah, it is at 85, but is it done rallying to the upside? I'm not 100% sure. I like to stick with stocks that are volatile when I'm using the relative strength index. Yeah, Brian, you're welcome, bud. You're welcome for SoFi. It was a good spot too.
What happened with SoFi there? Just
Oh,
got short, or?
Oh, I was just going over the chart because he was mentioning that he's looking for SoFi to travel up and get up to about $25. And I was mentioning that there's this topping tail here. So on a daily closing basis, it would negate if it closes above 25.11 on a daily closing basis, it would negate this topping tail, and that could be a good stop out level if he decided to get in at the $25.11 level or $25 level. Now, if you get a break of this downsloping or this upsloping trend line, then you got further downside. You could probably hit back to about $20. You got this gap fill in the charts that still needs to be filled on SoFi. So that's where I see potentially getting to. Yeah.
Nice. All right. So Kevin asking about stocks. I think Lawton will keep you updated on that, Kevin. Mujistem, TTD had a perfect cup and handle. Probability was to go up, but collapse on earnings. Yeah, exactly. It just depends on the earnings, and if there's a pattern there that the earnings go with, if it's a bullish pattern and the earnings are bullish, it's probably going to be even more bullish because the pattern's there, and vice versa.
Okay, so my thought is this could be your cup and your handle. So a break, I guess, yeah, you're right. It did. You should have anticipated a higher move on the break, right? So absolutely correct, Dr. B. Take this pivot low. I mean, this would be the midline, and on a break, I mean, really, it should have moved up to $116 right there. The only problem is
but you're calling that a cup. Where is your cup and handle?
So the cup could start here, and then the handle's here.
Yeah, sure.
If that's what he's playing as far as the cup and handle. But the one thing that the caveat with that is, look at what it did, right? You've got this upsloping trend line. So the more often it hits on an upsloping trend line, the weaker it gets. Like if we took this low pivot here and brought this down a little bit, this is your trend line. This is your support level. So again, earnings can be crazy because technically this is still in an uptrend because you're putting in, you got a low, a high, higher low, higher high, higher low, higher high, but then the pattern failed, and that's when you get these massive down moves.
Yeah, what earnings are today? I didn't see.
Let's double check. Do you remember when we used to do the earnings trader, Dr. B?
Of course, we were the OGs, man.
That's right. Okay, so we have Cisco, CSCO.
Mm-hmm.
Oh, we even did morning earnings traders every once in a while. I mean, it wasn't very frequent. Yeah. Now, let me tell you, that was rough. Some of these, I mean, getting up, I was on the West Coast for some of them, and some of these stocks wake up at 6:30, 7 o'clock, and so that's 3 to 4 o'clock West Coast time.
Yeah, to be honest, it wasn't. It actually wasn't worth it because
there weren't enough
all that
of them.
Plus, yeah, they're not moving, and kind of have to just get lucky. I mean, they were moving, but most of them wouldn't. So
yeah,
and the liquidity too. Think about the volume and the liquidity. There's none.
Oh, yeah. I mean, every once in a while you get one like Roblox that that moved rapidly, but it was few and far between, and you never knew which day it was going to be. At least in the afternoons, you have like 4 o'clock, 4:05, 4:10, 4:15. This one was like 6, and the next one was at 7, or it was tough. Yeah, Matasium saying Cisco systems today. Yep, I've got this beautiful upsloping trend line. Make sure, okay. So it connects these highs from 2019, high from 2022, and it just barely kissed this level today. I would say that it favors a pullback. The only thing I'm seeing is you had this beautiful bull flag, big flagpole, bullish consolidation. Actually, you consider this bullish consolidation here before another move up, bullish consolidation. So, I mean, it does favor a move to the upside. It'll be interesting to see, because if it does head higher, I mean, you're likely to go back up to the double top at $81.41. That was the high. Actually, wow, looks like it was a little higher. That was the high pivot from 2000, the .com era. So it's had quite the rally. It's down to $7. Now it's up to 70. It's crazy.
Yeah, it is crazy. It's totally crazy. And Cisco's another one where you've got this, and maybe you also kind of touched on this, but another stock that's just getting here close to the highs, the recent highs, and look at how problematic it can be if you are FOMOing in at the top here. This is a perfect example of it'll literally take you a quarter century or more to get back to the all-time highs if you were buying right here. So this is April 2000 or March 2000 was the all-time high, and we haven't hit that since. So that's pretty scary. That's pretty scary. That can happen for a lot of these stocks, guys. Be very, very careful. I mean, even though it's Apple, it's less likely to happen, but if you're buying up here, you can be crushed for a decade,
Yeah, Cody's saying that is the darling of the .com bubble. Yeah,
that's true. That's true. That was definitely one of the. But look at MSTR. I mean, there's so many stocks. So many stocks out there that same type of thing. MSTR rallied here. I mean, it took. It's a long time.
24 years.
24 years.
24 years and Bitcoin.
Yeah, exactly. Right.
I mean,
it wouldn't have gone up this much without Bitcoin. Yeah, it's exactly right, Ben. Good point. Look at this bull flag here, breakout. Yeah, crazy. So don't fool yourself. Like, do not buy at these highs. You will lose in the long term 99% of the time.
All right. I was just noticing actually on Cisco. Right here, you got this beautiful parallel channel.
Yeah, it is.
So I would say the probabilities indicate that there is a pullback on earnings, especially being at the top end of the parallel channel. And then you got this upsloping trend line.
Yeah, I would agree with that.
But again, it's earnings. You just never know. It really is going to depend on what happens with guidance, and really what the market is saying that that it's forecasting. So tough trade. All right, Dr. B, what do you think about the SOXX chart analysis? David sent over a TradingView chart.
Let's see here.
Cody, I agree. Cody is saying, I say buy in if you want to play the run, but mind your position size and always set a stop. At least then you're limiting your risk. Absolutely.
I like that. That's actually a great chart. Very well done. Probably the same chart that I would have drawn. Let me put it up here. SOXX, and this is on the daily chart. And we have some trend lines right here. Oops. Some trend lines right there. Trend line right there.
I see that as a lot of resistance too. I'm looking at the chart that you drew. Now it could head up to double top, right? It really it's going to depend on the semiconductors that are inside of this ETF.
Yep. And then you have this gap fill up here plus double top. Yeah, I think somewhere in here it will pull back. It should pull back.
Well, there you go. You heard it here first, folks. You heard it here first.
Oh, sorry, guys. I wasn't sharing my screen.
What? Oh, man. Yeah, there you go.
Yeah, so this is pretty much what David had. Pretty much the same trend lines here, and then I drew in these blue trend lines. So somewhere in here, you'll get some resistance.
Looks like a lot of resistance.
Yeah. It's very overbought too. Bearish divergence here.
The charts that we really got to look at are like AMD, TXN, and all of the underlying commodities that are not commodities, underlying assets that are inside of that ETF, because it's a larger ETF of all this of a lot of semiconductors. And I think AMD is like 7%. You have TXN and other ones that are inside of SOXS or SOXX. So we'll need those to pull back first, and then we can definitely get a top.
Man, look at this, Ben.
Looks
Unbelievable.
similar.
This is incredible. Yeah. It's like a 80% move on the SMH.
Yep. Yeah, Adam, he ended up switching back to the SOXX charts.
Check this out. This is inverse head and shoulders, bull flag, a huge rally.
It really is powered by tariffs and AI news. Microsoft had a pretty nasty sell-off today. Open positive at 531, putting in a reversal candle. Oh yeah, I'm going to talk about eBay tomorrow in my RSI trade of the day. It's poised to go higher. Based on
it's just crazy in price discovery mode.
Yeah. Oh, it is. It's a $45 billion company, so it's not a huge company, and it's only 4.19 million shares. Average is 5.7. So I mean, that's
I didn't realize they pay a dividend. eBay
Do they
pays a
really?
dividend. Yeah, I had no idea. Yeah.
okay. So eBay's active buyers hit 134 million, up 2 million users year over year, fueled by growth in collectibles and the launch of Klarna, or is that Klarna's buy now, pay later service in the U.S. Wow, that's what's doing it. People gonna buy your stuff and pay you later for it. Well, they wouldn't be paying you later. They will be paying back the Klarna or Klarna or whatever. There are so many of these buy now, pay later places.
Yeah. It's no bueno.
I know. I
No
think
bueno.
Drew or Lawton and I were talking, and there are a lot of people who are, saying, "All right, well, I'm going to go to Walmart and go to the grocery store. I don't really have the money, or I don't want to pay cash for the groceries that I have. So I'll just put it on one of these buy now, pay later. And so by the next time you're going in for groceries, you're still paying on your last week's groceries, but you don't want to pay cash for this time. And so then you're just going to be paying for groceries that you've already eaten. And then you're going to be paying later for groceries that you're getting now. I mean,
It's a slippery slope. Very, very slippery slope.
how are people going to collect on that? Oh, I'm going to need your groceries back. I mean, good luck with that.
Exactly. I don't see. I mean, I guess they would put them in. I guess what credit? What do they call that? Credit collection, and send a collector after them.
Yeah. I mean, you can repo a car. Can't repro groceries already eaten.
Nope. It's always nice to have a solid asset, a hard asset as collateral when you're loaning something.
Although there's still no guarantees that they're going to return that in the condition that they borrowed it.
True.
So that's kind of the tough part too. Lawrence is saying, well, that's one way to defeat inflation. Just don't pay for them. Just don't pay for your groceries. Make somebody else pay for them.
That's hilarious.
So, I mean, this is just kind of my thought is, okay, so we're in debt as a consumer society. Do the things that people do buy now and pay later for, are those counted as debt as well in this whole total debt that the United States has?
I think they're starting to count. Maybe there was a law that is starting to calculate that.
Because that's, I mean, really, it's insane. Laura says you can repo the person. It's called prison, and private prison owners made money and pay it back in tax. Sadly, I know. Yeah, I honestly do not think that the prisons should be private entities. I don't. I mean, if you've got a private entity that's making money off of putting people in jail, then there's no incentive to rehab them and get them out. Because you want the more prisoners you have, or the more people in jail you have, the more money profits you make. It doesn't make sense to me. Seems like a weird system. But
Conflict of interest, if you will.
What's that?
Conflict of interest, if you will, right?
Totally, 100%.
Ted, yeah, I did hear that it wasn't reported to the crediting agencies, but I think they changed that. But I could be totally wrong.
Yep. It is dangerous. You got that right, Ben. Hence the drug war also. Yeah. I know, Lawrence, 100% agree. Okay, so I did have a chart request, and I guess we're doing that on this thing. I don't know. So I'll switch over to my charts. Remove Dr. B. All right, so NEE. Let's see. Will you kindly have a look at NEE stock? Stock has been going up slowly. I don't see it going up slowly. It looks like it's putting in, did have this bear flag that was forming, then this green bar candle, now kind of a bull flag, but it's not a very well-defined bull flag. And they will announce earnings tomorrow. Well, just like every other chart that we've gone over today, right? There's no advantage one way or another going long or going short. I apparently had this upsloping trend line that broke earlier, that from March 2024 all the way up to October 2024. Had this nice sell-off. I'm sure Dr. B could find a wedge in here somewhere. Could be shoulder, head, shoulder possibility with an attempted breakout and then a rejection. So what I would be looking for and at is this upsloping trend line right here. Did pierce it, but the more often something bounces on a support level, the weaker and weaker it gets. And another thing that I'm not liking about this stock for a potential bounce is the fact that it hasn't really recaptured the 70 and it hasn't really went down and hit the 30. So to me, it's not giving me any real confluence on overall buying sentiment or overall selling sentiment. So this would be one that I would definitely stay away from. Now, what you could also do is, I don't know if you're long or short, or you're thinking about going long or short, you could put a trend line that connects, let me click that trend line tool, connects this pivot high, and so if you're looking at a place to short or potentially exit a trade, if it reaches this $83 and 25-cent area, kind of in this area, this would be a great place to exit, or it could be a potential great place to start a short on earnings. Be about a 17-18% move higher. And look at this, right? It corresponds with a nice gap fill in the charts right here at 82.97, and then you've got additional resistance, which is this gap fill at $85. So somewhere in this area would be a great shorting opportunity. It could go as high as 26 or even pierce this level, but I see a lot of resistance for NEE to get through before it continues even higher. I was just going to check. Maybe I can create a wedge. And not as well as Dr. B. So price can consolidate in this area with this support level and this resistance. If it breaks to the upside, you're going to move higher, obviously, and you break to the downside, you're going to flush out. If you're looking at a place to go long on NEE after earnings, I don't say into earnings, you may get a bounce right here at the $62 level or pretty close, pierce of $62. So that's the chart of NEE. What do you think, Dr. B? Oh, he's gone. He left me. Oh, wah, wah. Okay, let's take a look. Let's take a look at Bitcoin. Oh, it's getting close, you guys. It's getting close to pushing all-time highs. This daily topping tail is still intact, and I believe it was a weekly topping tail as well. Yeah. So you still have this negative sentiment in this topping tail right here. You start putting, starting getting through 123,231 bucks. Time will tell on if this is a bull trap or if this is a continuation move. So what you'll want to do is you'll want it to take out that topping tail on a weekly closing basis. But not only that, but you need an additional push higher. Oftentimes, price action likes to come back and retest. And so if it pushes higher, maybe gets to 125, 126,000, and then pulls back, this could be a continuation move. What I've mentioned in my RSI trade of the day, you've got this upsloping trend line that's still support. So right now we are still technically in an uptrend until we can break this upsloping trend line. So just like anything else, you want to take a look at a pivot low, a pivot high, a higher low, higher high, higher low. And so this could actually be the start of a continued push to the upside. Again, we still have this upsloping trend line. So if it does break, then you're heading back down to 110,000. That's just what I see.
Oh, I think that Bitcoin chart looks bullish though, doesn't it, Ben?
It's still in an uptrend. I mean, anytime you have these up moves right here, so this is the first hit, second hit, third hit, it bounced on it again, but it's still giving bullish sentiment, at least for the time being. So that's the trend line that we're watching for. Again, if we can break that, then a lot of selling pressure is going to come in. But you got to respect the uptrend, especially with the markets continuing higher.
It's true, yeah. It's a good way to put it. You got to respect the uptrend. Yeah, and just understand that, the crypto markets. If you look at like ETH, right? So the crypto markets are starting to run here. So you've got ETH, Bitcoin seems to be consolidated. Ran here, consolidated, ran, kind of consolidated, but then broke down, and now reattacking this all-time high. Yep. So again, consolidated here, ran, consolidated. Thanks, Ben. And then now attacking this all-time high. ETH, really strong today. Just day after day, it's up like 5-6%. And then if you start looking at the altcoins, you're starting to see some really, really big rallies in the altcoins. I think there's a lot of these that just start to really rip. And let's see, ICP, ADA. Yeah, I think ADA rips. Solana. Look at LRC. LRC very low on the chart here.
See, this is the problem with a lot of these altcoins is, yeah, they're running, but they're still not even close to any of their all-time highs. I mean, you got Ethereum, you got Bitcoin, you got XRP, that's pretty strong as well. But overall, there's still so much negativity in these altcoins that
there is. Yeah. Go ahead.
I do see that what you were talking about, like that last chart, could be a potential for a rally, but how much more money do people have to continually push through the markets with the S&P 500 at all-time highs, with the SOXS or SOXX at all-time, or not at all-time highs, but getting close there, and you got Meta and Nvidia and Microsoft. These are all pushing. So
yeah, for sure.
When does the money start outflowing, and where are people getting this additional cash to pump back in it? Because usually there's a money rotation, right? So usually there's a pullback out of like Bitcoin into some of these altcoins to get them to rally, or out of the stock market, or at least these higher flyers pull their money out so that way they can drive money into some of these altcoins. But hasn't really seen too much of that lately.
Yeah, it's definitely been a different market from the previous crypto runs, with Bitcoin and Ethereum now taking the lion's share of the money. You have a few stragglers like XRP, Solana, that are really just that are just outliers. And then TRZ too. TRZ? No, it's TRX. TRX, I think. Tron, yeah. Tron's probably going to get to the all-time highs here pretty soon.
Yep. They're the haves and the have-nots. All right, YouTube fans, thank you guys so much for watching with us on here live. We appreciate you guys being on here every Wednesday with us. Thanks for supporting us. we will try our hardest to answer questions about specific stock charts, as well as if there's a potential setup, give a day trade in here. Afternoon sessions are a little bit lighter on the day trades, but we're still looking at charts. We're still trying to maneuver through current positions and give you guys a good show. So that's what we have for you guys. We appreciate you guys, and we'll see you guys next time, next Wednesday. Please make sure you like, follow, and subscribe. Ring that bell so you can get notified every Wednesday, 1:30 p.m. You guys have a great day. Take care.